Hello everyone and welcome to my private conversations with me when I am revising on the week that has happened. So right now it's 4th of November and we have the elections coming up. Okay, so this is how I usually study for the past week and then have a little rundown on like what I can anticipate in the upcoming one. Right, so let me just go into my Notion. Okay, so this was the calendar on the previous week, and right now we're on 4th. So you can see that I've written stuff for like Monday, Tuesday, Thursday, and Friday. So right now what I want to do is just go through what I've written down during Monday, Tuesday, etc., and then go back to the charts and see what played out. This is the best way for me to learn because I like to see what happened and what I anticipate and then give myself a pat on the back when it plays out or like learn something new when it doesn't. Okay, so on Monday, I wrote to myself that we trade Mondays on NFP Fridays. So here you can see that Monday there's no news, and then Tuesday, Wednesday, Thursday, and Friday there are news. And it's all read folder, which means it's high impact news. Alright, so starting out from the weekly candle, we see that Dow Jones closed with a large red candle, while NQ closed with a doji and ES closed with a longer tail. Right, so here Dow Jones a big red candle, and then we have a doji on NQ, and then a longer tail compared to the wick on top for ES. It's currently Monday and we are seeing a green candle. So in the beginning of the week, right after the opening, you can see that this little guy is actually a green candle for all three of them. So I anticipate this week to be a bearish candle, which means I want to see it in red color. So weekly levels to look out for, I marked out for this is the current week that's drawn. I marked out the previous week's low and high for all three of them. And then for NQ, I even marked out the 50% of the entire week for the bottom doji. And then for Dow Jones as well, high and low, as well as the 50% weekly wick. So going into the daily, I've marked out the 20-day swing low as target for this week. So the 20-day swing low is down here. So this is the equilibrium indicator where the blue line in the middle is 50% of the entire range of the entire last 20 days. And then my target is this swing low 20 days where a lot of wicks are below here. And then here, another swing low 20 days. And for Dow Jones, it is already reaching into it. So you can see that there's divergence between S&P 500, NASDAQ, and Dow Jones. Dow Jones is already making, all the way down to the last 20-day swing low, while these two are still hovering in the premium area. So NASDAQ has run out the most recent divergence high, and all three open with a new week opening gap. So now I'm looking for price to drop into the new week opening gap, then looking for longs into higher liquidity from Monday to Wednesday, and then Monday to Wednesday London session, and then I'll look for shorts into lower liquidity from Wednesday to Friday. Okay, so now I've already have my entire week planned out. So from Monday all the way until Wednesday London session, I'll be looking for higher prices. Yeah, so looking for price to drop into the new week opening gap first, and then going higher. And then once we hit Wednesday's New York session, I'll be looking for shorts into Friday. Yeah, Wednesday New York session to Friday. So that would encompass the entire weekly candle. So there's the opening, and then the upper wick, and then the drop, and then the close. And right now on Monday, it's already a up. Okay. So on H4, bullish new week opening gap. Okay, let me just show you guys what I'm talking about. This orange box right here is the new week opening gap that was just given on the Monday. So all three of them have that opening of new week opening gap. So what I'm anticipating is price to drop into this new week opening gap, go higher, and then drop lower when we reach into Wednesday. So price is always there, right? So I can just mark out all this previous week's high, new week opening gap, previous day's high, etc. for me to know what price level to look out for, but ultimately I still need time to play it out with me. So when I am forecasting, like, okay, earlier of the week, this is what I'm looking for, and then later part of the week, this is what I'm looking for, they have to match with the price levels that I'm looking at. But I always wait for time to appear, then I go into the market to look for the price. So now I'm just marking out all the price levels, and then I already have like a timetable of when I want to show up to the markets and what to look out for. So the bullish new week opening gap are the nearest, most powerful PD array for me that is under price. So this would be a discount. So price is currently up here when I took this screenshot, and then anything below is the new week opening gap, and then things that are above, I've marked out the swing high for ES and NQ. So the swing high for ES and NQ is previous day's high, here and here, and then an inverted weekly fair value gap for Dow Jones here. So this is a weekly bearish FVG, IFVG, which means it's a, initially it was a bullish, but since price broke beneath it, it is now a bearish fair value gap. Okay, so what I'm looking at is this. So you can see from this low to this high, it was a weekly fair value gap, a bullish fair value gap that's supposed to send price higher. But right now we have more bearish, more bears in the market, and now this level has become a weekly bearish inverted fair value gap. Okay, so that was what I have seen on Monday, and then this is my chart going into H4. I'm anticipating for price to drop down into new week opening gap and then go higher. So let's go into the chart and see what happened. It was a H4 time frame. Alright, so this is what we have. I usually trade only the ES and NQ. So you can see that opening price over here. This was Monday's candle where price opened. So what it did was go down into the new week opening gap and then push higher without taking out the previous day's high, which was the next PD array that I marked out. But for NQ, we can see that it fell into the new week opening gap, and then it took out the previous day's high. And as for Dow Jones, it dropped into the new week opening gap and then go up higher, but failed to reach into this weekly IFVG, which it has already, broken out of in this big red candle. And this itself was like the retracement, the ultimate retracement back into this red candle before pushing lower. Okay, so that is the front part of my prediction, right, on Monday, Tuesday. And then as we can see on Wednesday, it has already fell lower. Wednesday, New York session. Yeah, nice. So I had the timing until Wednesday London session. Let me just mark it out. Wednesday London session is up here. Okay, usually when I go anything lower than H4, I would only focus on ES and NQ already. Wednesday London session. Wow, amazing. So I've marked out what it looks like from Monday all the way to the Wednesday London session that I'm talking about. And then as for NQ as well, you can see that the later part, which is Wednesday PM session, New York session, all the way to Friday, it's just down into lower prices. It's very clean. So even though there's a lot of news, a lot of like election stuff coming, the market is still following this algorithm that ICT speaks about. Okay, so next I am going to go back to my journal and see what was Tuesday's prediction. Right, so Tuesday there's news at 10 a.m. Price has reached into new week opening gap for ES and NQ but not Dow Jones. There is volume imbalance within new week opening gap, so mark it out and would like to see price closed with a body under the volume imbalance. Okay, so here we have the new week opening gap as well as a volume imbalance on the daily time frame, and here is the volume imbalance on NQ within the new week opening gap. Okay, and none for Dow Jones. So mark up, and I would like to see price close. So what I am saying is that for this candle, I would like to see the bodies closing beneath of the daily bullish volume imbalance. When it's closed beneath it, then I can look for lower prices. But at least I want to see, you know, like the bodies covering it, because that would signify a balanced market. Okay, let's just go to the charts and see what happened. So this was the volume imbalance from the beginning of the week, which is from Friday to Monday. I wanted to see the bodies closing, right? So you see that on Tuesday, they actually went higher. It tapped on it before going higher, and then closed with the body on Wednesday. And for NQ, Tuesday it went higher. Wednesday it actually closed right above this volume imbalance range. This kind of thing really makes me excited when I see it, you know, closing, like staying away from the volume imbalance, and then the next day open with another volume imbalance. Like now we have an overlapping volume imbalance with a new week opening gap from 18th of October. So this level itself is just over and over again showing us, you know, big movement. And look what happened after, the day after. It just spiked all the way down into the previous week's low. So since we're here already, okay, it still have not touched my swing trade, you know, goal of the 20-day swing low, which was marked up on the first day, Monday of the week, right? So let's just go back and read what else I've written. H4, price is still respecting the daily volume imbalance, where we see no candle bodies have closed below the highlighted area. So this is a sensitive level. So on Tuesday, if you go down from daily into H4, you can already see how sensitive it is. So I'm looking at liquidity under the previous day's low marked from last Friday. Okay, so over here, you can see the daily volume imbalance is drawn out from here, and you see how price is just, you know, wicking on it but not closing, as well as for NQ. So this was the candle that was still playing out. right? So there was still 10 minutes before it closed. So you can't judge this as a closure beneath the volume imbalance. And then you just watch the candles above before this is all just staying away from the volume imbalance. None of them want to close within the volume imbalance. So 10 a.m. was the closing of a H4 candle, and we could see how ES had the bodies overlapping the volume imbalance right here. The entire volume imbalance was covered on ES, whereas NQ did not. So it's very precisely, just avoiding this volume imbalance. So this itself is also considered a divergence between the two prices. This to me means that price is indecisive, ES showing willingness to go lower, while NQ is ready to go higher. So I'll wait for more data. So both price have taken out previous day's low, which is the Monday, this entire box over here, while staying within last Friday's price range. So last Friday's price range is this entire range. For both of them, they have taken out previous day's low, which is Monday, on a Tuesday. Right? So 10:30 a.m. price spiked again, and this is usually the timing I look for picks or turning point for New York AM session. So 10:30 comes along, we see a big spike into higher prices where it took out both London high on ES and NQ. And then at 10:36, I started to see how price is going higher. And DJ is already reaching for the weekly IFVG, which I have talked about. Right? So at 10:50, which is the macro timing, ES has reached for a new day opening gap, while NQ is right at the Asian session's 1 standard deviation line over here. And then I marked out this minute 15 fair value gap. So here's a little interlude to give you guys a clearer picture of what I'm looking at. So basically on Tuesday, we were looking for higher prices to form the high of the week. So the moment when price drops into the new week opening gap and starts moving away from it, for both of them, you can already start looking for entries into higher prices. And then the target would be the previous day's high, previous week's high for ES. And then this is the previous day's high and previous week's high overlapping with each other for NQ. At 10:30 a.m., you can see that price actually closed on this candle above London high, whereas at 10:30, price did not close above London high. Instead, it only closed above this new week opening gap. So NQ would have been a better trade. And then for every discount candle, like for a candle that goes down into red, it could be an entry point for you to take into higher price point. In this case, the previous day's high. So Wednesday, I was already anticipating price to drop down. So we have the weekly divergence in previous week and current. So previous week and current. This is a weekly candle. You can see that on S&P we have lower candles, red candles, right? And then on on NQ we have higher, and then lastly on Dow Jones we have lower. We are looking at the wicks. Okay, so the weekly candle, it's already red, and the expansion. So this is the expansion that is going on, which was anticipated. And then on daily, the ES has a lower divergence, so ES is the better trade. So take profit at previous week's low. So now we can see that it's an equal low. NQ is lagging and may drop lesser than ES. So it's very beautiful. See how NQ volume imbalance is overlapping, while ES volume imbalance is lower than the other. Yeah. So here we have a lower volume imbalance, while here on NQ we have overlapping volume imbalance. Okay, so the target for ES would be the previous week's low. Alright, ES reverse just at previous week's low, gaining more liquidity to be wiped out later. This is 8:42. H4 candle is only green one in the last few. So overall, all this series of red candle this current candle that's playing out is still in green. So if we anticipate this green candle to also close on a red, then this would be a good price point to get in, so that when price reaches lower, you can already take profit. So here's how the candle closed since that previous clip. This is on H4. Okay, so Wednesday was really nice also, because you can see that it went higher, right? This price movement here, this high, low, high, right? And then we have a high, low, and then a higher high compared to this 3 swing moves, right? 1, 2, 3, 1, 2, 3. So this is divergence happening, as well as another divergence on here. We have a high, higher high, higher low, and then high, lower high, higher high. So all these are divergence before this move was done. And there's another volume imbalance here on H4 that is overlapping with the 2 volume imbalance on the daily and the 2 new wick opening gap. Okay. Alright. So ESVI overlap with new wick opening gap. May drop into. So now we have a Thursday high and a Tuesday low, and we still have a PM session that may create the low of the week. So I'm just putting it out there that Thursday PM session might still give us the low of the week. But take note that Friday is NFP, so it also might just stop right there. Okay, 9:30 price opening, we have divergence underneath, and then price went higher. On this side, NQ has already taken out the London high, while ES have not. Got London high and tap on new opening gap. Alright, so after that, after this divergence was done and the opening, right, opening of the market, price actually reached lower into that previous week's low that I was looking at. Okay, and then my next prediction is then overall looking for price to close under the opening to fulfill the weekly candle being red. So I marked out the true wick open, which is in purple of these two, and what I'm looking at is that I want to see price closing underneath this purple price point, which is your 5851 and your 20461. Alright, and then next draw on liquidity is the weekly 50% on ES and the previous day's low, previous week's low, and weekly rejection block of 50%. Okay, so at around 11:09 p.m. price continue reaching down into the weekly rejection block and all the price points that I marked out. Okay, so last but not least, let's get into Friday. Friday's TGIF trade. So at 8:30, the non-farm payroll was released, and then there's another trade opportunity at 10 a.m. Another news. So at 10 a.m. there's another news release. So on NFP Friday on H1, this is what we see. Okay. So from here, I see that by marking out the swing high to swing low, we have 20% retracement on the weekly 50% wick for ES and 20% retracement on new wick opening gap low for NQ. So if I take the high all the way up there to down here, Thursday's low, so we see that Thursday it did indeed give us a second run lower prices to give our weekly low. And then I do a retracement on 20 and 30%. You can see that the weekly rejection 50% is in line with 20%, and for NQ the 20% is right at the new wick opening gap. Okay. Really nice. So on ES, the 20% is also in line with the Asian range standard deviation, which is up here. And then from here, I'm just adding on more overlapping data. So you see, if I add another fib retracement on the last swing move, we will have overlapping levels. Okay, so on S&P 500, right? If I take the last swing move, which is this entire Thursday's push down into Asian low, right? This entire move, basically. And then I open up the ICT levels, which is 61.8, 70.5, and 78.6. You can see that 78.6 is nicely with previous week's low, new week opening gap, as well as this fair value gap within the last lower move. And then for NASDAQ, we have 70, okay, that last swing move again from 61.8 to 78.6. You can see the overlapping with 30%, previous day's low, as well as this fair value gap from this big move down. Okay, so this would be my TGIF trade where it's Friday and I'm looking for retracement back into the weekly time frame. And here is the target where I will be looking for my take profit. And this is where price is at now. Right? So let's go to the charts on H1. Okay, so we have a really nice reaction from the markets, right? So when we're looking at that, it was right here. And then price gave exactly this marked out level, which is 30%, 61.8, previous day's low, and the fair value gap found here. And then a nice reaction away from it. And as for ES, it's also that level marked out, which is the previous week's low, over here 78.6, and the fair value gap within the last swing move down. Right. So that is all for the weekly review. There are so many opportunities to be taken within a week. So if you're looking at a bearish weekly candle, you're looking for up move in the beginning of the week. And as soon as you see how it fulfills, you know, taking out this previous day's high and then giving us a nice little divergence between these two markets, it started going lower. And right on time because it's the Wednesday New York session. All the way down into the end of Thursday. And last but not least, we have our TGIF trade on every Friday where we're just looking for a return into the weekly range. So I hope you guys learned something from this. There are many opportunities for you in the market using ICT. So keep studying and stay on the charts. Good luck trading. I'll see you guys in the next video. Bye.